Welcome to the show. Today we're going to talk about the dopes in the media and their views on housing, the stock market rally in the economy, the Link IPO, and the pending or possible super changes and what it could mean for you. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
We've only got 2 minutes and we're going to cover each topic in no more than 2 minutes. First question to you, Peter. Some reports came out from Macquarie Bank recently that have basically scared the media to say that the housing market could possibly cause a recession. Your views on the report? Thankfully it was hosed down by the Governor, Philip Lowe. So your views on the report, what Philip Lowe said, and the housing market in general.
Yeah, he's a Deputy Governor, but one day he will
Deputy
be Governor.
Governor.
But certainly, Marty, I think you're absolutely right. I wouldn't call my mates in the media dopes, but they are intellectually challenged. The way that was actually covered, wasn't it? See, some investment bankers
Weeks ago in Switzer Daily,
brilliantly too,
saying that the market was due to cool, and I cited 3 or 4 reasons, and I still think they're relevant. One, of course, is we've had such great rises, particularly in the Sydney market, and you always have to get some sort of correction after that. Secondly, we know that the Reserve Bank, or through APRA, is tightening up in investor lending. It's getting a lot harder, and our experts at Switzer Home Loans, tell us exactly what's going on there if you're looking for an investment loan. Thirdly, construction. We just know that eventually, supply meets demand. But most importantly, something that the rest of the media hasn't picked up is we did have a fall in the share market. Markets don't operate in isolation. When the share market goes down 10 to 15%, which is what we sort of had from peak to bottom, you have some impact in the property market. Sometimes it takes months. So I think a bit of a cooling, but there's no science in this 7.5%, and the idea is going to lead to recession. I think that's fanciful.
I think the Deputy Governor's comments were reassuring in the fact that he basically said that demand was meeting supply, and that's what that's what they wanted.
Yeah, Philip Lowe's a very gracious man, unlike me, and he was implying that the people who wrote that and the people who interpret it were nincompoops.
And they're just looking for headlines at the end of the day. Let's face it.
Correct.
That's a financial organisation who wants to get published in the newspaper, and they know that if they write a story like that, it's going to be picked up by the press, and then here we are right now.
What are you talking about?
Moving on, next topic. Okay, last week was a great week on the stock market. Rallied hard. Last couple of days have sold off on a bit. Pete, your views on the market at the moment?
Yeah, I think they oversold. The Glencore Tuesday really pushed stocks down further than we thought. We thought 5,000 was going to be the base. That day we got to 4,928, wasn't it, Paul?
Yep.
And so I think that was an overreaction. And I think as a consequence, I think we're in this holding pattern until some either really good news or bad news comes along. I suspect it'll be good. And I think we'll keep creeping up over the next year. But I expect a lot of volatility.
Paul, your view?
I've been in the same camp. I think we might have found a bit of a base of about 5,000, but we're not out of the woods. And our market's just still a little skittish. Even the last couple of days, particularly Monday, just on nothing, came off almost 1%. Yesterday, almost the same. A little bit of bad news out of China. Probably open a bit lower again today on not much news. So I think the people are being influenced. I mean, there's another factor at work here. There's a lot of short selling occurring.
Those damn short sellers.
And our institutions don't seem to care. So falls are being exacerbated by short sellers. They're taking control. That's one of the reasons we've gone so hard. Look at world markets, Australia versus the rest of the world over the last 2 or 3 months. We've done the hardest.
We have.
US, no news about this in the US, having best been over this, but yet we're,
So what will be the drivers that could take the market higher?
I think our market needs a positive lead because we can't do it ourselves. So we need to see good earnings reports in the US. We need to see a bit more sort of positive news coming out from the government here, and also some companies.
Earnings reports across the board are predicted to be negative, but that's mostly driven by the energy sector. If you take the energy sector out, the forecast from your mates at S&P, Capital IQ, said that earnings should grow about 3%. That was the forecast.
And that's the real economy.
But take out energy prices, and they're looking at a negative return for the third quarter.
And also, look, I think, watch this. I wrote a great article today, Marty. I'm sure you read it.
I will.
About
Haven't read it yet.
The Turnbull turn-on effect. And we saw business confidence spiked yesterday. A big jump. And today we look for the consumer confidence number. If we get that, it could be a
Is the weekly number?
Exactly.
Well,
the monthly one.
Westpac Weekly was good,
Yeah, it was good. But I'm looking for a monthly one. And I think women in particular, I'm going to be looking to see whether they're positively affected because they've been very negative. This consumer confidence number could show women are turning positive, and that's the Turnbull turn-on effect.
Next topic, moving on to you, Paul. Link have an IPO coming up soon. Probably one of the biggest IPOs of the year, if not the biggest.
Yeah, we
Your
covered this
thoughts?
in Switzer Superport. Look, a fabulous business. The management team, you know, John McMurtry
Yeah,
and I
good
know
man.
John very well. They're a great team. It's been a great record of that business.
For those that don't know, what do they do?
Yeah, look, we'll know what they started off being, and that's a share registry. So if you're a shareholder in the Commonwealth Bank or Telstra, as most people are out there, you know, you'll see Link Market Services
The back office team.
as the provider of the registry. Now that business is only 20% of their business these days. Their major business is providing back office services to superannuation funds. So they provide the back office to people like Australian Super, to REST.
All the administration?
Yeah, all the
Unit
administration.
trusts?
So, you know, recording details, processing member contributions, processing benefit
It's a big
statements.
admin business.
All that stuff that goes around the back office of being a super fund. Now, they are the largest in that provision, but yet most super funds still do it in-house. So they see huge opportunities still
Good point.
in that business.
Great.
So about 60% of their revenue comes from that. So look, it's a fabulous business. Look, my only problem about the IPO is I think it's sort of priced to perfection. So, you know, it's on an effective PE of somewhere between sort of 21 and 24 times. That compares to Computershare, which is trading around a PE of about 14.
And that's their major competitor.
That's their major
they're more
competitor.
just a registry, though,
Yeah,
are they?
Computershare is a different business. It's mainly a registry business, but it's also a global business. And Australia is now only about 10% of Computershare, whereas with Link, about 95% of its revenue is from Australia and New Zealand, and their main business is now in superannuation. But they are still competitors in that space, and it's the same type of service activity. And so the multiple comparison is not out of order. I just think there's better value to be found in
There has been a
Computershare.
decent allocation made for retail investors as well.
Yeah, look, I'm sure it's probably will go all right.
Yeah.
The way these floats work, they priced so that there's a little bit of a stag in it. The question is what it'll be like in 12 months' time. And the other thing is the private equity sell down. Now, the last two big private equity sell downs haven't done that well. Nine Entertainment, same sort of pricing mechanism as this, has been a dog, right? Healthscope has done okay. But if you'd invested in Ramsay Healthcare compared to Healthscope, same competitor, right at the time, you would have still had a better return in Ramsay than Healthscope.
And don't mention Myer.
And don't mention Myer. And the same thing we're seeing, you know, bear in mind that they sell down a little bit up front, they pay off debt, they escrow the shares, and in a year's time, they're all available to come on the market, and that's exactly what's been
get
happening in
out.
Healthscope, and the price comes off. So, look, a year out, I'd rather own Computershare than Link, but not to say it's not a really terrific business.
Okay.
You buy them on a dip.
Moving on, some talk in the paper this morning that changes to superannuation are back on the table under the new Prime Minister Malcolm Turnbull. The Labor Party would be happy about that. Go to the experts. Your view, Peter, do you think changes will happen?
Yeah, I do. But fortunately, Turnbull has said that he will go to an election with those changes. Look, there are loopholes. Superannuation can be too generous in some areas, and I'm sure they're going to start closing them up. There could be sunset clauses, so my view is find out what those loopholes are from your friendly advisor and make sure you're
So
benefiting
we'll
from
come
them.
back to what you should do quickly, Paul.
Okay.
Do you think it will happen? And then we'll
Oh,
talk
yeah,
about
look,
what we should be doing to prepare
Okay,
for
Trent.
it.
I think by what he said yesterday and also what Scott Morrison said as well, they're
Setting
back.
it up?
Yep, they're back on the agenda. We know that people in Treasury are really keen to make the changes. We know what ACOS is out there. We know that ASPRA is out there lobbying. So all the lobby groups will come back on and say, yep, let's tax superannuation. The only good news, as Peter says, is that they won't make them before the election and they'll probably sunset them.
So what should we be doing now then?
Well,
to
I
get,
think
get
there
our,
are a
get our
couple
super
of
under
really
control?
important things to do. First of all, you look at the changes that Labor's already proposed, and there's a good chance that the government will adopt some or all those already. So the obvious thing is that probably a cap will be placed on how much money you can put into superannuation.
$2.5 million bucks is sort of the
alternatively,
number.
how much can be tax-free when you're taking it out. So I think if you've got a partner out there or a spouse, you should be active in trying to make sure your superannuation is split between you and your partner. That's step number one.
That's to prevent the cap
Yep.
working
You
against
get as
and
much in as you can.
Get as much into your spouse's account as
Yep.
you can. Lots of ways you can do that. They're all legal. That's number one. Secondly, you know, I think as Peter and I talk about, transition to retirement, it is a loophole.
Yeah.
We both know that. And
So
look,
use it
look,
before you lose
if
it.
you're over 56
Good
and
point.
you can do it, you may want to take about that. So again, speak to your advisor. I mean, there's things that are going to happen here. You've got 12 months basically to act, and there's some basically pretty sensible things you can do to minimise.
And that's a
the
good
impact
point.
of
You
these
should definitely
changes.
look at getting advice on that.
Yeah, I mean, this for what's going to cost you, it could save you thousands and thousands of dollars down
Yeah,
the track.
most definitely.
That's all we've got time for. Thanks for watching. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Ricard.
and
We're mad about money.
Shh.